Hey everybody, hope everyone's doing well and had a good day. In this video, I will review the Emini 5-minute chart from Monday, June 9th, 2025. First thing I want to talk about is the context going into the close from the prior day. This would have been Friday. And we can see a lot of overlap, bars with small bodies and big tails, which is suggesting trading range behavior. Small gap up into the day, still within this tight trading range. And then a big bear bar closing near its low. Good for the bears, but possible late leg. Maybe it's leg 1, deep pullback, leg 2, deep pullback, leg 3. Not a perfect shape, but maybe expanding triangle. So problems with the bear breakout. Late leg, possibly at support. And the bear breakout was followed by 3 or 4 consecutive bull bars. So big down, big up to start the day. The bear breakout is 1 bar. The bull breakout had 4 bars, and it's a channel on a smaller time frame. We rallied, pulled back, rallied, pulled back, rallied a third time. So here the bulls have 3 pushes up, and we are back in the sell zone of bar 1, the first big bear bar of the day. And bar 1 is likely to get a second leg down, but now the bulls have a 4-bar micro channel, and the odds are there's buyers below, and the bulls will get a second leg. So big down, big up, big confusion. It's a trading range. Both sides need a second leg. The bears got their second leg. It was brief. You could say it lasted 3 bars from the doji to this swing point. And then there were buyers at the low of this bull trend bar. Now the bears have their minimum second leg. Breakout, pull back, second leg down. And now the bulls are looking for a second leg up. The bull breakout traps traders below. Bears buy back shorts. Bulls buy the pullback, looking for at least a scalp. And in this case, they got a decent swing out of it. 1, 2, 3, 4, 5, 6 bars up for the bulls in this simple leg, meaning there were no pullbacks. Even though we paused here, had an opposite bar, there was no pullback until this bar went below the low of the prior bar. So we have 6 bars up. First reversal probably will be minor. Buyers below. Bears need at least a micro double top. And this is what this is here. We went up, down, down again. And it's a higher high double top with the prices to the left. And if you just take a channel line from this bar's high to this high, project it to the right, we're also testing that resistance as well. So now it's possible that the bulls have 3 pushes up to a channel line, maybe 2 legs up here, 1, 2, and at the top of a trading range. Now the bears still might need a better second leg than this, although because of the depth of the pullback, because we went above the high of the bear spike, the second leg may not get all the way back down to the low or even the low close down here. So what happens? We have a triangle on the open. Not a perfect shape, but lower highs, higher lows. We get the bull breakout and follow through. Gets a second leg up. This blue line is the midpoint from the high of bar 1 to the low of bar 2. The midpoint of this triangle structure, but also the apex of the triangle where the bear trend line and the bull trend line meet. That's the apex of the triangle. Also usually support if we get the bull breakout. It's resistance if we get the bear breakout. So in this case, triangle breakout mode on the open, bull breakout, follow through, pull back, second leg up, deep pullback testing the apex of the triangle, which became support, but the approach 4, 5 bars down, strong enough for a second leg. This bear bar is relatively strong. There's also a micro gap between these lows and this high, and that's a sign of trapped traders. Traders who bought below, well, let's think about this. Simple leg, 6 bars up, buyers below this bear bar, weak sell signal, they make a scalp. Traders who place a buy limit order below this bar, weak sell signal, they get trapped. Odds are we test it and it becomes resistance, and there's a reaction here. We ended up getting a micro double top, up, down, bear breakout, pullback, and a second leg down, but the second leg much weaker than the first, and we're still creating higher lows. So at this point the market is creating higher highs and higher lows, but there's a lot of overlap today. The odds are today will be some sort of trading range day and not break out into a trend day. So because we're getting higher highs and higher lows, lots of overlap, it's possible that today is a broad bull channel. The bears get two legs down, testing support, and the bulls see a double bottom, reversal, and follow through, and they're looking for at least a small second leg up, but then a test of the new high. Some unfortunate bull bought the high tick, and they're using a wide stop. They scale in lower, and they're hoping the market gets back to their original entry. If a bull, because a bull bought here, and we pulled back this deep, and then the approach to the new high is relatively weak, lots of overlap, deep pullback here, maybe a 50% pullback there. The odds are there are sellers at a new high rather than buyers, like there would be strong buyers at a new high in a strong bull trend. So if it is a bull channel, the odds are there are sellers at a new high. Bears, they see a wedge, 1, 2, 3 pushes up, they see a wedge, double top, but where is the signal bar? Even if this was a truncated wedge double top, 1, 2, 3, you place a stop order to go short, one tick below the low of this bear trend bar, never got filled, and then no sell signal here. We ended up getting the breakout of the wedge, what was supposed to be a wedge top for the bears, and the market rallied from the low to the high of the structure for a measured move up. So this is the failed wedge measured move. Strong bull bar here, and I say strong, big bull bar, but also relatively big tail, and 20 bars into a swing up on a probable trading range day. Also 1, 2, 3 pushes up. So not ideal to be buying here. This big bar is more of a gift for the bulls. The bulls see that bar. All of a sudden they get a windfall of profits. We're at a resistance area, and bulls will take profits on the close of that bar. Aggressive bears might sell. Other traders might wait for the retest. You see the reversal, retest the high close, maybe sell there for a second leg down. But then we have two legs down, testing the breakout point. Remember, this wedge should have been, in theory, should have been resistance, and then we should have had a couple of legs sideways to down, but instead we got the bull breakout. So then we retest the breakout point, and it becomes support. So after two legs down to support, reversal, follow through, probably get a second leg up. This is a bad sell signal, buyers below, bulls get a second leg up. But now we have 1, 2, 3 pushes up to a new high. And remember, lots of trading range price action here, bull breakout, but deep pullback, trading range price action here, big up, big down, big up. And now at a new high, probably bears scaling into shorts and bulls taking profits on longs they took lower. Now at this point we have 5 touches of this resistance line, 1, 2, 3, 4, 5. Some traders might see it as a wedge double top or a higher high major trend reversal. We have a bull trend line break, retest, 1, 2, 3 pushes up, and then we're in breakout mode, tight trading range here, and again possible higher high major trend reversal, bear breakout, deep pullback, testing the highs but a lower high, and then the bears get their major reversal and we get a swing back down. I have the open of the day marked as well because trading range days usually close somewhere near the middle, And when you have a trading range day, or a day that's likely to be a trading range day, like today, lots of overlap, trading range price action through here, even though there's a bull breakout, more trading range price action here, it's possible the market comes back and tests the open of the day. And then you also could take this high and this low, where it kind of became a tight trading range, not a great shape, but maybe a triangle, and the midpoint is around the open of the day as well. So this was a test magnet, and we got to it in a hurry. Broke below it, retest here, and ended up closing below the midpoint of the day. So for me, the day structure today was, it's a trading range day, and I see it as a broad bull channel with a reversal at the end of the day. So you can see the lines I have drawn, the channel line, the trend line. We're getting higher highs, higher lows, but there are tradable bear breakouts along the way. Here, lots of overlap, trading range price action. Other traders might call it a trending trading range day with a lower trading range and an upper trading range, but because of the higher lows and higher highs, to me it's more of a broad bull channel. But it's possible to have a broad bull channel be a trend day, and it really comes down to the individual, to the trader, and their definitions for how they define day type and degree of overlap, and there are other factors involved. For me, it's a trading range day. Lots of trading range here, lots of trading range here, but trending lows and highs, and of course the reversal at the end of the day. That's going to be it for today's review. So thanks everybody for watching, and I hope everyone has a great night.